Hi guys, in this video we are going to discuss about the regressive tax. We have already discussed about the progressive tax in our previous video. That is, it's kind of a tax where the tax rate increases as the taxable rate or the taxable base rate also increases. That both of them increases. Now let's see the definition of regressive tax first. Regressive tax is a tax imposed in such a manner that the tax rate increases, that the tax rate decreases as the amount subject to taxation increases. The tax rate is decreasing and the amount subject to taxation is increasing. Now, as we have already discussed about the tax rate, it is the cut amount. It's the cut amount of the government. That's what government says is that you have to give me this much percentage of a cut out of your total money that you have in your pocket. Okay, and this is the amount subject to taxation is the amount of money that you have that you have why oh you that you have in your pocket. Okay, so what the government says is whatever money you have, okay, if you have 100 rupees in your hand, okay, give me 5% out of it. That's the tax that we are talking about. Okay, now let's see with an example what this regressive tax is and how it works. Here we have two pretty ladies here. One is Salma, who's wearing a veil over her mouth, and another is Saloni. She's wearing two nice hair clips on her head. Okay, now both of them want to see a movie in the cinema hall here, a nice movie here, a new release, which is there, and they just want to see that. Let's say first day, first show. Now Salma has 100 rupees. Okay, let's make it amount 200 rupees in her hands, and Saloni has 2000 rupees as her pocket money. Okay, what she's taking with her to the cinema hall, and the price of the ticket as a whole is 100 rupees. Okay, and out of 100, let's say the bifurcation is 90 rupees is the actual price of the ticket, actual price, which what the cinema hall will keep, and 10 rupees is the entertainment tax. The entertainment tax, which is an indirect kind of a tax. Okay, so this is what we have seen. Out of 100, 90 is the actual price and 10 is the entertainment tax. Now both of them are going to watch this movie. Now see what happens. Saloni pays 100 rupees of the ticket, and out of that 100, 10 rupees is the amount of tax. Okay, and the amount that she has is 2000 is her total amount. Okay, the total amount that she has is 2000. And in case of Salma, the tax amount is same, that is 10 rupees, and the total amount that she has is 200 rupees only. Now, how to compound or how to calculate tax? Let us see here. Now my tax rate is equal to the amount of tax paid upon the total amount the total amount you have the total amount you have into 100. Now by this formula, let us calculate the amount of tax that both of them has paid. Let's see the case of Saloni first. Okay, Saloni paid 10 rupees as tax, 10 rupees as tax, and 2000 was her total amount of money, the total income, whatever we can say, into 100, which comes out to be 10 upon 20 equal to 1 by 2, or 0.5%. 0.5% is the tax rate what Saloni has paid. Now see the case of Salma now. Now Salma, she also paid 10 rupees as tax, and she had 200 rupees as the total amount in her pocket in 200. Now see what happens. she paid 10 by 2 equal to 5. That is 5% is the total amount of tax that she has paid. That she has paid. So this is what regressive tax mean. Salma had 200, she paid 5%. Salma had 200 and she paid 5%, and Saloni had 2000, she only paid 0.5% of tax. And this was the definition of regressive tax: a tax imposed in such a manner that the tax rate decreases as the amount subject to taxation increases. The amount subject to taxation has increased and the tax rate has decreased. It is lesser here and the tax rate is higher here. It is 5%. Now let's see another thing regarding regressive taxes. Regressive taxes tend to reduce the tax incidence, and when we say incidence in commerce term, it simply means the burden. The burden. Okay, so the regressive taxes tend to reduce the burden of people with higher ability to pay, so that the person who has higher ability to pay, or the person who's rich, here the tax burden decreases as they shift as the tax burden shift disproportionately to those with lower ability to pay. That is, someone who's rich will be paying less tax and someone who's poor or not so rich will be paying higher taxes. This is the meaning of regressive tax here. And usually we will find, in cases of income tax or the regressive or the direct taxes, we don't find regressive tax structure. Let's see what would have happened if regressive tax structure regime was there in cases of direct tax also. We have four guys here. One is Shrey, okay. Another one is Tom, Sunny, and Poonam, and all of them have different monthly salaries. Let's say Shrey is earning 15,000 a month, Tom 40,000, Sunny 80,000, and Poonam 1 lakh, whooping good amount. Okay, and if we calculate it via multiplying it by 12 as all of them as their yearly incomes, so it comes out to be 1 lakh 80,000, 4 lakh 80,000, 9 lakh 60,000, and 12 lakh respectively. Now see, regressive tax structure if it would have been applied here. Regressive tax regressive tax structure regressive tax structure in this case scenario. Let's say the government says, we don't care what kind of amount that you are earning, we just want 50,000 rupees flat every year from all of our citizens, flat. Okay, that's a flat rate that the government asks as a cut pertaining to their indirect tax or direct tax, whatever. Okay, now see what will happen if this scenario exists. Shrey pays 50,000 out of her total income, which is 1,80,000, and same case for all, as all of them are paying the same cut amount, which is 50,000. Okay, the fixed rate. Now see what will happen to the ultimate tax amount that all of them will pay. Okay, now this will come out to be 1,30,000, or we need not calculate it, just forget it. Let us see the calculation directly. Okay, 50,000 upon 180,000. Okay, I'm just making it short for easier calculations. Okay, or rather let me just increase some space. 50,000 upon 180,000. Here 50,000, that we are talking about the tax rate here, it is my tax rate. Okay, or rather the tax that we have paid. So 50,000 upon 480,000. Similarly, 50k by 960k, that is 960,000, and similarly 50,000 upon 1200k. Now, what's the tax structure that will come out to be? I have already calculated these amounts, so I'm not going into detail of the real calculations. It'll come out nearly to be 27.7%. It comes out to be 10.42%. this comes out to be 5.2%, and this comes out to be 4.17%. Now see what is happening here. The person who was earning the the person who was earning the least, that is Shrey, he's paying the highest amount of tax, that is 27% of tax. Whooping good. Okay. And the person who was earning very high, okay, or she is only paying 4.7%, the least amount of tax that she's paying here. And also, there could be a case scenario where, let's say, there could be a person, let's say, let's give him a name, okay, Sakshi. Okay, now Sakshi, what she's earning only 50,000 a month, or let's say only 40,000 a year. Maybe she's very poor, okay, and she's not able to meet with her total income, or she had losses in her business, and she, at the end of the year, she saw that she's able to manage only 40,000 a year. And as the government has already said they want 50,000 of rupees, then in this case she have to pay 50,000 out of her pocket, 50,000 out of her pocket, when she has only earned 40,000, when she has only earned 40,000. In this case, the amount that she has to pay as tax is 5 by 4, 5 by 4 into 100, that is 120%, a whooping great amount for especially a person who do not have the ability to pay. That means here in this case Sakshi only had 40,000 in her pocket, and the government has asked for 50,000 of money, which certainly she cannot pay directly, so she might have to take a loan for the same. That means she's going into negative for this thing. If we remember the ancient time or the colonial time, or any 17th or before 17th or 18th century, if we remember that time, the feudal things or the serfs or the farmers had to pay a fixed amount of grains, a fixed amount of grains, or fixed amount of produce, whatever they were doing, and they had to pay this to the king or to the masters, no matter whether they are producing that much or not, whether they are producing that much or not. For example, the master has said, okay, I want 6 sacks of rice, 6 sacks of rice the coming season. I do not know whether you grow that amount or not. In these cases, in such cases, the farmers used to be in a fix that they if they, let us say, if they had grown only 8 sacks of rice, the produce was only 8 sacks, and out of this 8 sack they had to pay 6 sacks to the master. Then think what would happen the entire year. The entire year the farmer will be cribbing for the same, as he will only be left with 2 sacks of grains. Or even a bad case when he only produces 6 or less than 6, then you can certainly think what would have happened. That is why we see that regressive taxes, the regressive taxes are considered bad, if going for indirect, if going for direct tax regime, direct tax direct tax regime. Well, this was the case for the regressive taxes. I hope you understand what does this word specially mean here. Thanks a lot. Thanks for watching. Have a good day ahead.